Good morning. I'm Goro Keita. Today is July Lima 2026, and the markets are sending mixed signals. While U.S. tech stocks are reeling from a DeepSeek-induced AI rout, Indonesia's IHSG just posted a massive dua-delapan gain. That divergence tells a story about capital rotation and regional resilience. Let's dissect what's really happening beneath the surface. The next layer changes everything. The IHSG closed at 5,875.78, up 1.3 points on heavy volume of 1.5 million shares. That's not a dead cat bounce. It's a conviction move. Foreign investors are likely rotating out of overvalued U.S. tech and into emerging markets with stronger domestic demand. Indonesia's GDP growth and stable inflation are attracting capital. This rally has legs if the macro backdrop holds. What most people miss is simple. But don't get complacent. The IHSG's rally is happening against a backdrop of falling gold and silver prices. Down 1.4 and 2.5 respectively, that suggests a risk-on rotation out of safe havens. If the AI sell-off deepens, it could spill over and drag down EM equities. The correlation between US tech and EM is still strong, even if lagged. Seen from another angle, the problem shifts. Now, crypto, Bitcoin is up 1.77 to $63.261, and Ethereum gained 2.73. Ripple led with 3.1. But Solana dropped 0.8. The divergence is telling. Traders are favoring established coins over high beta plays. Bollinger Band's creator John Bollinger just signaled a potential W-shaped reversal for Bitcoin, suggesting the bear market may be ending. That's a technical signal worth watching. The consequence becomes clearer here. Kraken just announced that eligible users can now use tokenized stocks as collateral for leveraged trades. This is a game changer for DeFi and traditional finance convergence. It means you can borrow against tokenized Apple or Tesla shares without selling them. This increases capital efficiency but also introduces systemic risk if tokenized assets become volatile. Regulators will be watching closely. Behind this signal, a larger pressure builds. Meanwhile, CalSure hit record June trading volume driven by World Cup prediction markets. This shows that retail demand for event-based contracts is exploding. Prediction markets are becoming a legitimate asset class, not just a novelty. The World Cup effect could spill over into other sports and political events, driving further volume growth. CalSure is positioning itself as the go-to platform. The next step narrows the search. Let's pivot to tech. The biggest story is DeepSeek, a Chinese AI model that triggered a massive sell-off in US AI stocks. Nvidia dropped 1.2 and the Nasdaq sank. But the Wall Street Journal argues the panic is overblown. DeepSeek won't sink US AI titans. The reasoning: US companies still lead in scale, ecosystem, and enterprise adoption. This is a buying opportunity for long-term investors. At this stage, the pattern breaks. But here's the nuance. DeepSeek's efficiency could actually accelerate AI adoption by lowering costs. That's bad for hardware makers like Nvidia in the short term, but good for software and application layers. The market is pricing in a worst-case scenario that may not materialize. If DeepSeek forces US companies to innovate faster, the long-term outlook remains bullish. What makes this matter is key. Midjourney is now demanding Hollywood studios reveal their AI usage details as part of a legal dispute. This is a pivotal moment for AI copyright law. If Midjourney wins, it could set a precedent that forces transparency in AI training data. Studios are fighting back, but the public sentiment is shifting toward accountability. The outcome will affect every generative AI company. Finally, the clues point to the question. Alibaba has banned employees from using Claude Code, classifying it as high-risk software. This is a classic example of geopolitical tech decoupling. Chinese companies are increasingly restricting Western AI tools, while US companies limit Chinese AI. The result is a bifurcated AI ecosystem where developers have to choose sides. This will slow innovation and increase costs for multinational firms. Look at the first clue. On the developer radar, CS Fundamentals by Krishnagangwal has won 571 stars. It's a curated collection of computer science topics for placement prep. This repo's popularity signals that despite AI hype, foundational CS knowledge is still in high demand. Companies are still testing candidates on DSA and system design. Don't neglect the basics even as AI tools evolve. The next layer changes everything. Another trending repo is iOS Location Spoofer with 283 stars. It's a standalone iOS app to spoof GPS without jailbreak. This raises privacy and security concerns. While it can be used for legitimate testing, it also enables cheating in location-based games and apps. Apple will likely patch this. But the cat and mouse game continues. Developers should note the techniques used. What most people miss is simple. To wrap up, today's key takeaway is that markets are rotating. IHSG is surging, crypto is cautiously bullish, but US tech is under pressure from DeepSeek. The AI sell-off may be overdone, but the decoupling trend is real. Stay diversified, focus on fundamentals, and don't chase panic. This is Goro Keita, signing off. If you found value, subscribe for daily briefings that cut through the noise.